Again, stock exchange quotations are not available for certain shares. So net asset means total asset minus total liability divided by number of shares. When two companies combine together or absorption for adjusting the rights of shareholder. Hello my dear students, I am Dr. B.S. Subramanya, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Grade College, in Temple of Excellence, MYSURU. In this session, I am going to handle Advanced Corporate Accounting 4th Semester, Unit 5, Session 2, in favor of Valuation of Shares and Goodwill. In the last session, we already solved problems on valuation of goodwill. Here, now we are going to solve the valuation of share, that is the equity share. So there are two methods. One is called intrinsic value method, another is called yield method. In the intrinsic value method, what are you going to do? Total assets minus total liabilities, capital employed, minus preference share capital, capital employed for equity shareholder divided by number of equity share. What is the procedure? Total asset, either market value or book value. Book value means balance sheet value. Market value means adjust value. Then total liability. Liabilities are creditor, BP, provision for taxation, proposed dividend. Deduct total capital employed minus preference share capital, capital employed for equity shareholder divided by number of equity share. In the yield method, profit method, so they give the profit 2 years or 3 years or 4 years. First calculate the average profit. Total profit divided by number of years. Then next step is profit available to equity shareholder. Average profit minus transfer to reserve, whatever the profit available to equity shareholder. Next, number 3, capitalize the profit. Profit available divided by normal rate of return. Then whatever the answer comes, divided by market value of share, market value of the share here, per share value, then fair value, first share as per intrinsic value, share as per yield value, both should be added, divided by 2. This is the procedure. We'll move on to problem now. Valuation of share. Explain the need and the affecting valuation of share. Need in valuation of share. No doubt, in most of the cases, stock exchange quotation themselves are taken as the value of shares. However, there are some situations where the stock exchange quotation cannot serve, cannot serve as the value of share. For instance, stock exchange quotation are inadequate for the determination of values of shares purchased and sold in large blocks. Again, stock exchange quotations are not available for certain shares. For instance, stock exchange quotations are not available for the share of private company for determination of the values of shares of a company. Factor. Time of amalgamation, when two companies combine together, or absorption for adjusting the rights of shareholder. When a large block of share is purchased so as to acquire controlling interest in a company, when shares of one class are converted into shares of another class, estate duty and tax purposes, determination of security margin where shares are offered as a security for loans and advances. Number 6, when a company is nationalized company, valuation of assets of finance or investment companies for the determination of amount payable to dissident shareholder for acquisition of shares. This is the problem. 15 marks. This is the balance sheet of a company on 30th June. We got building, we got machinery, we got stock and data. The liabilities are creditor provision for IT. The goodwill of the company was valued at 3,20,000. Land and building 4,80,000. Plant and machinery 2,40,000. Out of the total debtor, it is found that debtor is 16,000 are bad. The net profit earned by the company amount to rupees 1,60,000 in 2019-20, 1,80,000 in 2021, and 2,12,000 in 21-20. Every year, 20% of profit earned was transferred to general reserve. A return of 10% on the investment is considered fair in the industry. Compute the value of company share by net asset method, yield method, fair value method. So first we go with net asset method. Net asset method. You have to take book value or market value go one by one. Assets and liability. What is the first asset? Land and building. Old. New one. The goodwill of the company value 3,20,000. Goodwill. $3,20,000. So one more. Building 4,80,000. Buildings. Buildings 4,80,000. Building over. Then plant and machinery. Machinery 2,40,000. So debtor, machinery over patent trademark they have taken. Debtor I will take. Debtors 1,76,000 minus 16,000. Debtor, this one. 1,76,000 minus 16,000. 1,60,000. No information about other assets. This over there. Patents and trademark, same. Patents and trademark. Patents and trademark 40,000. What next? Stock 96,000. 96,000. This over. This over. Debtor over. Then bank balance. Cash at bank. It comes to 1,04,000. Don't take primary expense. 1,04,000. Add 10, 14, 20, 24, 33, 34, 3 plus 3, 6, 3,20,000, 4,80,000 plus 2,400 plus 1,60,30, 40,000 plus 96 followed by 30 plus 104, 14,40,000. Next, liabilities. liabilities. Come back here. What are the liabilities are? Creditors, 2,56,000. Next, provision for taxation, 80. Provision for IT, 1,20,000. Add the figure. 3,76,000. So net assets is equal to 14,40,000 minus 3,76,000. 14,40,000 minus 3,76,000. 10,64,000. Intrinsic value of shares is equal to 10,64,000. So net asset means total asset minus total liability divided by number of shares. Here how many shares are there? 4,000. 10,64,000 divided by 266 per share. This is as per asset backing method. How is the procedure? Net asset method. Book value or market value have taken. If the market value is not taken, we have taken the book value itself, except preliminary expense, which is not considered as an asset. Then liability you have deducted. Net asset is equal to 10,64,000 intrinsic value, 10,64,000 divided by 266. This goes in favor of which method? Net asset method. We'll go with yield method, profit method, yield method. Now, based on profit, total profit for how many years here? Profit 1 year, 2 year, 1 year, 2 year, 3 years. Total profit 1,60,000 plus 1,80,000 plus 2,12,000 minus RBD 16,000. Add. So 160 followed by 30 plus 180 followed by 30, 2,12,000, 2,12,000 minus 16,000, 16 followed by 30, 5,36,000. Average profit 5,00,000 36,000 divided by 3. 178,667 recurring. 178,666 or 67. This is the average profit. Step number 1. This is first step. Number 2. Second one. Profit to equity shareholder. Profit to equity shareholders. Average profit is equal to 1,78,667. There is no taxation. Transfer to reserve. Out of that amount, some amount will be transferred to reserve. What's the percentage? Transfer to reserve 20%. $1,78,667 into 20 divided by 100. Deduct 1,78,667 minus 35,733. 1,42,934. Profit available. Step number 2. Number 3. Capitalization. Of profit. Formula. Profit available. Profit available divided by normal rate of return. What's the procedure? Profit available, capitalization profit available divided by normal rate of return. This is 1,42,934 divided by, what is normal rate of return? 10%. So this is 1,42,934 divided by 10 into 100. 14,29,340. Then market value of each share is equal to 14,29,340 divided by 4,000 shares. 14,29,340 divided by 4,000 shares. 357.33 share value. So this is as per yield method. Then what the question asks? Fair value method. Fair value, intrinsic value What is the first one? 266 plus 357 whole divided by 2. This is 266 plus 357.33 divided by 2. 311.60. Repeat. 266 plus 357.33 divided by 2. 311.66, say rupees 312. So, first method is asset backing method. Under asset backing method, total asset minus total liability is equal to capital employed divided by number of equity share. Second method, for profit basis method, first you take the total profit for 3 years. If there is RBDs, that should be deducted, divided by number of years. Then profit available to equity shareholder, average profit minus transfer to reserve, what is available to equity shareholder. Capitalization of profit, profit available divided by normal rate of return. Last step here is capitalization profit divided by market value share is 4,000 per share, where fair value, intrinsic value plus yield value divided by 2. What we have solved. Hope you understand. We'll go to next problem in the next session. Till then, goodbye. Meet in the next session.